Hello, today we're going to learn how to handle a barter exchange in QuickBooks. The first thing we're going to do is we're going to create a new vendor. I've already done it here. Put the vendor name and then put a -V to distinguish their role as vendor. The second thing we're going to do is do the same thing but as a customer. And then here you can see I added a barter customer and I put a -C. After you've created the vendor and the customer, go ahead to your chart of accounts and create a new bank account and call it Barter Clearing. And there's one more step we must do, and that is to set the payments preferences not to use undeposited funds. So just go to Edit, Preferences, and go to Payments. Use undeposited funds as a default. You can see we've already unchecked it here. And so let's see what all this means. In this example, we have an invoice, and you can see the customer is a barter customer, -C, to highlight their role as a customer versus a vendor that we'll see in just a minute. Here we've given them 10 hours of installation work, and we're going to go ahead and receive a payment. Let's say they gave us $350 worth of consulting work. Now actually we're not getting a cash payment here, we're just getting a barter exchange of services, if you will. Let's go ahead and hit yes. Payment amount $350, and in this deposited to, we're going to put it to the barter clearing account. This invoice is going to post this to your sales line. That's what an invoice does. When you invoice, it debits AR and it's going to credit sales. And so now this is going to be on your P&L on the sales line. So let's go ahead and take a look at what that's going to look like. And here we have that revenue repair, that $350 right now appearing on your sales line. Let's go ahead and enter a bill from a barter vendor, -V now. Let's say it's for $350, and let's just call this advertising, okay? So when you post a bill, or when I hit save and close, what it's going to do is it's going to debit the expense and it's going to credit AP. When we actually pay the bill, and let's go ahead and date this so we can isolate that on the P&L. Let's go ahead and pay this. And when we pay this, keep in mind that it's going to debit the accounts payable and it'll credit the cash account. So come on down here. We're going to check is fine. And then just put barter clearing. And then hit paid. And let's make sure it's after the 19. It is. Selected bills. Hit done. Let's go back to our profit and loss, hit refresh, and there you have it. You have your income here, and then you have the expense here, and you show 0 here. Now why is this also important? Because it is a sale in barter income. It's a sale by definition. The IRS does say that you must include gross income in the year of receipt, the fair value market of goods and services, okay? And it's also important because you want to get your gross profit number correctly. And so we do want to record that as a sale, and then you're just netting it to 0 on your net income line by then going as the expense as well. And that's it.